Hello, welcome to Any Answers Answered for September 2022. Hopefully you've had a good summer. Certainly people have been posting on the Any Answers pages throughout the summer. We've picked a couple of things to have a look at. The first question, Tim, comes from David Ross, who asks a well-trodden question, I suppose. The question is relating to Class 2 national insurance for landlords. Opportunity or a trap? He has a landlord client who had previously paid Class 3 and was advised by the Revenue on the phone to pay Class 2 instead. And really the question here is that the right answer? Are they in a position to pay Class 2? And if they do go on to pay Class 2, does that automatically lead to a Class 4 conversation as well?
Yeah, it's a bit of a shame that there have only been, I think, by now something like 9 postings in answer to David's query. And it's something that's cropped up before. There was a case, I think it was Rashid versus Garcia, back in 2000 and something, in which the landlord claimed that he should be allowed to pay Class 2 in order to get the various benefits that Class 2 buys you, and was not allowed to. The law subsequently was changed in 2015, National Insurance Contributions Act 2015, and what that did was effectively treat landlords with property letting businesses as eligible to pay Class 2 if they wanted to, without actually having a trade. Now, the best place to go to for this, and I hesitate only because I know that we quite often query the value of revenue guidance on these matters, but the best place to go to would be the National Insurance Manual, paragraph 23800. And that sets out quite clearly the position for Class 2 and also, as you mentioned, Class 4 for landlords. And what it says is that the nature of property letting requires some activity to maintain the investment, but that's not enough to make it a business. If it's not a business, then you're not able to pay Class 2. But they do say in the revenue guidance, in order for a property owner to be a self-employed earner, which is the relevant term for Class 2, their property management activities must extend beyond those generally associated with being a landlord. For example, actively looking to acquire further properties to let, and the letting of property being the property owner's main occupation, could be pointers towards there being a business for NIC purposes. So if it is a business, then you're entitled, but not actually required, to pay Class 2. But the revenue then go on to say a landlord will also be a self-employed earner if any of their activities amount to a trade for income tax purposes. Now, this is important because if it's a trade, A, you're required to pay Class 2, and B, you're required to pay Class 4. If it's a business but not a trade, you could pay Class 2, but you don't pay Class 4. And the revenue guidance says that if any of the activities amount to a trade, you'll also be a self-employed earner. This could include, for example, receiving income from other services, such as providing a bank of washing machines in a multi-occupancy block that is rented to tenants, or providing an ironing service to tenants. Running a guest house or hotel will also usually amount to a trade, and then you'll be a self-employed earner for NI purposes. But that would mean Class 2 and Class 4. So the answer to David's question is that the revenue guidance given on the telephone that the client could pay Class 2 rather than Class 3 would appear to be correct without actually triggering a Class 4 liability unless there is in fact a trade.
And that fundamental distinction between a business and a trade is what matters here, because it's all well and good saving money by moving from Class 3 to Class 2, but if it's a trade and we then have to add in Class 4, we've gone in the wrong direction.
Exactly.
Now, our second question this month is a brilliant question, which Tim and I and almost all of us learnt the answer to years and years and years ago. And we thought we still knew the answer. But of course, some chap called Osborne completely changed the law in 2017 and has created a very interesting situation. The situation is raised, and the question I should say is raised by the wonderfully named Lonely AirPod. And Lonely AirPod has asked a question relating to the crystallisation of held over gain. The situation is that a company has disposed of an asset which creates the gain. That gain is then held over, but is being held over against a depreciating asset, and therefore we're looking at the earliest of selling that asset or 10 years later. When that particular gain is then going to be charged 10 years later, 10 years has passed, Lonely AirPod says, and the question is, can they set it against a brought forward loss, trading loss, in that year? Now, of course, historically you couldn't, because a brought forward trading loss would be set against first fell profits the same trade only. But since 2017, I guess we have a different answer.
Yes, and you mentioned George Osborne. He relaxed the corporation tax loss relief rules very significantly from 2017 by allowing that a trading loss that is carried forward can be set not just against trading profits from the same trade, but against the total profits of the company, or indeed group relieved. And that remains, 5 years later, a pretty staggering change in the loss relief rules for companies. It does help Lonely AirPod's client here, because it doesn't matter what the origin of the crystallizing gain is. The fact that the gain crystallizes in a year following the 2017 change to the loss relief rules means that as long as the loss itself arose since that 2017 change, it can indeed be set against the crystallizing gain in a later year. One of the, I think Tax Dragon posts a suggested answer to the question in which he gives illustrated figures. I say here, it may be a she or a they. And what they say, Tax Dragon, is that suppose that the original gain that was held over into the depreciating asset was in the year ended 31st December 2013, and the loss that's being carried forward in the company, the trading loss, was in the year to 31st December 20, and that loss has not yet been used and it's being carried forward. When the deferred gain crystallizes in the year ended 31st December 23, can we bring forward that 2020 loss, trading loss, and use it against that gain? Answer, yes. As Tax Dragon says, while it may feel odd, that's just what the legislation says, and I agree. So the answer is yes, able to offset the brought forward loss against the crystallizing gain, as long as those dates coincide with the 2017 change.
Another incredible piece of complexity from the 2017 legislation that we couldn't possibly have imagined, nobody could have imagined, would crop up. Hopefully useful to the two people who posted those questions and many others besides. Do join us next time, where we might be looking at your question on Any Answers Answered. But for today,